Do you want to reimburse yourself for business expenses that you put on your personal accounts or pay with cash or home office or mileage? Well, in most cases, I know you're being a serious business owner and you're putting your business expenses on your business bank account. But there are always moments when you have to use cash or your personal account to pay for something and you want your business to reimburse you. You might also want to be reimbursed for things like those home office expenses and your mileage. So depending on your business structure, you might need what the IRS calls an accountable plan. This video is largely for business owners who have grown enough to go from that status as a sole proprietor or LLC, and they've made an S-Corp election for tax purposes. It's also for anyone who formed their business as a partnership because you can't take home office expenses or mileage deductions as easily as those Schedule C filers, so an accountable plan helps you get deductions for those expenses. If you stay tuned into this video, you can watch me complete my own accountable plan reimbursement for myself. I'm an LLC that made an S-Corp election, so I need to do this too. If you have employees, this applies to reimbursing them as well. It is important to keep specific records for these occurrences so that reimbursements can be tax-free. All right, let's dive in. Oh, and before I forget, disclaimer time. This is to be used for informational purposes only and does not constitute legal, business, or tax advice. Therefore, information published and presented should be relied upon only as an additional reference source, and independent research of the authoritative law is required for specific situations. We assume no liability for actions taken in reliance upon the information contained herein. All right, now that that's out of the way, first, what is an accountable plan? An accountable plan is just a reimbursement policy and expense reporting system that allows owners and their employees to turn in expense reports to the business for reimbursement in a way that keeps those amounts from being counted as taxable wages. The Bradford Institute has some great resources on this, and I borrowed this slide from a training I watched on accountable plans. Let's take a closer look. So right here, you got to have a written document. It is quick and easy, but it documents what the company policy is regarding accountable plans. Then you have to have expense reports. That's what we're going to walk through today. And if you improperly reimburse someone, that would be considered wages. 4 requirements for an accountable plan. Expenses have to have a business connection. Employees have to substantiate all expenses. That is you. You are also an employee if you are the S-Corp owner receiving payroll. Employees return all excess payments. That would be an instance where you might give someone an advance, one of your employees in advance, and they then document the expenses, and if you paid them more, they have to return it, or the difference is wages. And timeliness. So I encourage you to go for no more than a month delay, but for sure no more than quarterly. So why is it important to have an accountable plan? Well, you don't want an auditor to come back and say, nope, those payments were wages and you have to pay proper taxes on that. That's really the reason for this. Who needs an accountable plan? Accountable plans can apply to lots of different situations where expenses need to be reimbursed, but I'm going to break this down for my typical client who starts as a single member LLC who becomes an S-Corp for tax purposes. I'm going to show you the tax forms to illustrate why you need an accountable plan, but this same applies if you have employees that you want to reimburse for expenses that they incur. By the way, there's no official revenue threshold for becoming an S-Corp, but in general, I like to keep that number on the higher side, like over $75,000 of income per year. Reach out if you want my opinions about whether it would really be worth it for you to become an S-Corp. I popped over here to Gusto. This is my preferred payroll provider. They have a S-Corp tax savings calculator. It's way at the bottom of this article. The article is called "This spreadsheet could help save you over $5,000 in taxes," but the spreadsheet is at the bottom, and you can play around with this, but you can also ask for my advice. So let's take a look at the actual tax returns. When you are a Schedule C filer, you have a place to put your home office and mileage. Let's just do Control F, miles, and you would use this section for your miles. And let's check home office. Let's see, not that one. Office expenses, see instructions. Well, that's what it's going to tell you is to fill out the form 8829 to put those home office expenses on there. Now let's go to 1120S. This is what you fill out as soon as you make an S-Corp election status. Let's do it again. Miles, mile, nothing. Home, office, officer. Yeah, no place to put home office or mileage. So how do we solve this? Well, thus enters the accountable plan. So how do you put an accountable plan into effect? I like to talk about this in 3 steps. So step 1 is to decide what types of expenses will be covered and adopt a written reimbursement policy that identifies them. This is an example of the one that I have for my company, and I can provide you. I want to note that it talks about a few specific things. You have to identify that the expense must have a business purpose related to the owner employee's duties. The owners and employees must identify the expense with a receipt and documentation that verifies this amount, the date, the place, and the business purpose. The fancy IRS term for this is called substantiation. Owners and employees should provide documentation in a timely manner after incurring the expense. And advances can be given to provide for anticipated expenses, like for your employees, but any unused funds from the advance, or also known as the unsubstantiated funds, have to be returned to the business. So step 2 is that you need to create an expense report template. We're going to go through that when I show you how I do mine. But when owners or employees incur a reimbursable expense, they got to fill out a form and submit that report detailing the expense and the purpose and the amount. The business will then reimburse those expenses from the business bank account. If it's to you, then you're going to send it to your own personal bank account. If it's to your employees, you reimburse them. But you need to actually pay out the reimbursement. So that's my step 3, pay the reimbursement. Do it at least quarterly, but really you should do this monthly. So calculate the reimbursable expenses and actually reimburse with money. In my template, I do show how you can do this with a journal entry. If you're an owner who's trying to claim these type of expenses, and you would just journal entry it to shareholders' equity, but that's not the best way. If your template calculates $98.76, then send $98.76 from your business bank account to your personal account. When you do that, I suggest you categorize it to an expense category called accountable plan reimbursements. That way you can clearly see how much of the value this accountable plan is providing you. So just to be very clear, and for those of you that are solo entrepreneurs, you're going to create an account in your chart of accounts called accountable plan reimbursements. And when that payment that you make comes through your bank feed, mark it to that category. If you have employees, I recommend having one category called like owner accountable plan reimbursements and then one called employee reimbursements, so you can distinguish between the two. And then the receipt that you're going to attach is the Excel file with all the documentation, which I'm going to show you how to do with my own. All right, so that's the last thing we're going to do. I'm going to fill out my accountable plan. So here we go. If you want this template, reach out. All right, so hopefully you can see this. I date it by the month. So this is my January reimbursement. And I will do this each month for myself. Here's my company name, the date. So this is going to stay the same. So I reuse this template each time. I've got a very tiny little office here, but this is the business use percentage. So this section, monthly home expenses, you would fill out if you rent. If you have a mortgage, you can only claim your interest. There's lots of information here that we can walk through. I'm not claiming any of this in January. I will tell you that you can, I have HOA dues, but we have to pay those twice a year. I'm probably just going to claim those in the month that I pay them. One way you can do it is to divide those one-time payments or maybe semi-monthly, semi-annual payments over the course of the year. That does help with two things, cash flow. So if you're going to have a big expense, like your big homeowner's insurance or something, you'll have to have the cash to pay that back. So if you keep your bank account pretty tight, it might be better to divide that by 12 to spread it out. The other benefit of taking the time to do the calculation of only paying like a 1/12 of an annual expense is it smooths out the profit and loss statement, the net income on the profit and loss statement as well, which you might want. For me, it's not a big deal. Our homeowners association is not like a hardcore one. It's very inexpensive. So I'm just doing that. But this part you would fill out. Variable home expenses, repairs, cleaning. We do have someone help us twice a month. Business miles, this is where you would claim your miles. So I don't mess with all of this. We own our cars outright, so I don't have a loan. I'm not going to mess with depreciation. I just basically claim the IRS standard mileage rate, which you will need to update every year whenever the new mileage rate comes out for this calculator. But the point is, the more that you drive, the better this section will be. The less you do down here. I don't drive a lot, but I'm still just doing this because I don't want to fiddle with it. Internet cost, cell phone cost, this is calculating an 80% value of that, which is pretty easy to defend for most businesses like I am, and like most of my clients are. Anything you paid out of pocket, which hopefully you're just paying these with the business account, so don't try not to pay these out of pocket. And so then the total reimbursement I have here. So this is what I would send from my business checking to personal. Let's dive in a little more. So I'm using this as a way to track my mileage. I only had one trip in January. If you have more, you can put it here. If you are using a mileage app, download the report, slap it in here. And then here's another important thing, receipts images. So y'all, I went and I got all my receipts, cleaning, phone, internet. I just did a snip. I used the snipping tool and popped them in here. And again, if you need to do quarterly, if you need to do journal entry, it's going to pull that number that you owe and tell you how to make your journal entry. So this is my January accountable plan, $131.66. The last tip I'll give, when you go to save, come in here and change this to PDF, and that will be better for attachment purposes. You won't have to worry about anything getting changed over time. So this is February. I'm going to transfer this money for my January accountable plan expenses, and maybe I'll take the family out for dinner, courtesy of IRS Regulation 162-2. If you have any questions about business or bookkeeping or accountable plans, please reach out, y'all. I can provide detailed training on the templates that you've seen in this video. I'm Kate Josephine Johnson, owner of Heritage Business Services, and I help businesses build their business legacy.